It's December 13th, and this is, of course, the video log that takes 30,000 to a million. So today, I want to explain some of my positions that I've been changing up in the last few months. I am going to do a review of the account, so I'll show you all the positions, including the stock options, equities, etc. Quick review of the account. If you're not interested in that, you can just skip till you see me like this, my face full screen again. And I'm going to talk about inflation, United States versus China. I'm going to talk about why I'm so heavy on China retail and why I'm not going into resource sector. Well, I do actually like a couple companies in the resource sector. One of them is the Vale, or VALE, a Brazilian steel producer, and I like Rio Tinto just for a long-term play as a diversifier for any kind of portfolio, but I don't hold either of those at the moment. I did have some put options sold when Vale was like really low, but that expired and collected the cash, and so I'm moving on. Okay, so a brief review of the account. I'm sitting at 185, which is higher than last time, but it's still off my all-time highs by about $15,000. So even though the markets are going up, my account is going the other way, mainly because of the Chinese holdings. So you see them in a second here. I'm going to scroll up to the top. This is all of my options. You'll see here the ticker, the strike price of the options, whether it's a call or a put, what the expiration date is, number of contracts, and whether it's a sell or a buy. So I'm just going to scroll down through here, and you can just pause the video at any moment to try to figure out the exact positions that I hold. You'll see some green up at the top, mainly because these things are expiring soon and I've sold them. Scrolling down, you'll see here the major Chinese option positions relative to the account. And then here are my equities. Apple dropped down 2K from yesterday, but it had a very big spike. So I don't know if that spike will resume or not. If it does and the stock price reaches 180, then I will be selling 100 shares automatically by Friday. If it reaches 185, I'll be selling another 100. So this is my core position, but I want to thin it out a little bit if it reaches such heights, because I think it's going a little bananas and inevitably I think it might correct. So that's what I'm betting on. And if I lose my core position here, which is this 500 shares of Apple, and the correction never comes, so be it. I'll try to make money in other ways. I may sell puts later on, even if it doesn't correct, depending on what the company does, but I'll have to come back to it another time. At this time, I think it's a little too overvalued. So EBIX dropped down another $1,300 for me, 2.6 something percent. JD down almost 2%. Realty Income up almost 2%. The only green in the account. And then I have VIPS, ridiculously undervalued company, in my opinion. Then I have my main dividend payer here. Then I have Goldman Sachs, which is I've been trying to accumulate some Goldman Sachs here, under $400 per share. Alibaba, 50 shares, but a lot of options. So I probably should be holding the shares instead of options, but that's a topic for another day. Then I have some Visa and 1 share of DD just to see what happens during the delisting, to know what I can expect with my Baba shares. I'm guessing that they're just going to trade over the counter like I explained in a different video, but it may just drop down to 0. I'll have to call Robinhood and see what I can do about redeeming the shares, or see what happens if I lose all the money, or if I am able to turn over to Hong Kong exchange listed shares, or just trade them over the counter. We'll find out what happens. I will make another video here describing exactly what happens with that. If you're interested in the account tab, this is it, $232 under management here, including the debt of $46,400. It's sorted by total return, and now it's sorted by equity. All right, that's the account. So next, I'm going to talk about some of my positions. So first of all, the Chinese retail. Okay, so well, actually, I want to start with a little bit with inflation and some of the monetary policies that have been going on. Like, I know that China has also been pumping money into the economy, but I believe in a much slower pace than the U.S. has in 2020 and 2021. So it seems like the cash that's directly hitting the consumer. Okay, so for example, unemployment checks, or you know, the federal checks that they were cutting, the pandemic help and whatnot. Some states had their own stimulus as well. I know that California gave to most of its citizens another $600 check. So all this extra money that's been coming in is starting to decrease. New unemployment claims have been increasing pretty rapidly, even though continuous unemployment claims have been fairly steady. However, the spigots are slowly turning off. And when it comes to the investment world, asset purchases have been slowing down. The Federal Reserve is under pressure to slow down asset purchases even further because of the inflationary outlook. So that's going to be obviously, turning off the spigots a little bit as well there on that front. I think that the most impactful units of dollars on the economy is actually the ones that are hitting the everyday person in the pocket. So the stimulus checks and unemployment claims, etc., bonuses and whatnot. I think those are the most impactful, especially for the poorest of individuals, because they are under pressure to spend that money because they need to. If somebody is a little bit richer, they may elect to put that extra money into investment, bidding up stock prices. But if they're not, they may choose to spend the money, which then goes into that product, into the store. That some of it goes to the store, some of it goes to the manufacturer of the product, the business handling, everything else, logistics, etc. So it all gets spread out across the economy to the companies that we now invest in. So it's kind of I guess it levels up things in price, everything from the product price to the actual company earnings and eventually the price of the stock. So I think this boost is kind of winding down here, and we can see it starting with the big speculative companies that have seen a big hit as of late. You need look no further than ARK Investments and some names like Peloton and I don't know what else, but some technology stocks. Some of them have been gaining obviously since the major indexes are up, and those that have been gaining are just the usual suspects. Okay, some of the big, most powerful companies that are just kind of monopolizing the commerce nowadays. But that's also a topic for another day. I'm not against it, by the way. I don't want to trash them. I just they've been carrying the weight for the indexes, and it shows. Even though there's been a lot of underlying carnage underneath for some of these more speculative names that got the benefit of the doubt with the quote unquote free money that has been coming in the United States. So I think that's going down the direction. However, I don't think that China has been doing as much of that in their country. I know they've been doing some. However, I don't think inflation is probably that high. I don't know relative to before. Maybe it's higher than the U.S., but relative to what it was before is probably lower. I know that I don't know for a fact. I haven't researched the exact figures, but I believe it's actually lower. I know I did look at them, but I just don't know off the top of my head. A little bit unprepared here, I guess. But if it is higher, then fair. Okay, just put that in the comments and I'll eat my words. But so I think actually with the U.S. dollar, even though it's strengthening against other currency, I think there's just so much U.S. dollars out there. It's going to start looking for better deals, and eventually has to bid up worldwide stocks because the U.S. stock market is, in my opinion, overvalued compared to what it was maybe a year ago. So money's going to find themselves there, and also it's going to, be able to flow into other countries in forms of products and things like that, because China and other emerging markets are continuing to produce. It's not like everything is stalled there. And not only are they continuing to produce, but since I made a video about the Chinese consumer, and I believe the Chinese consumer is, even though it might be hitting a soft spot here, is continuing to improve in its purchasing power. So I think their accounts are getting more stacked. And I think that a strong middle class like that, an emerging middle class, is eager to spend money, which was my thesis, I guess, for investing into Chinese retail. And I think that it's going to be very strong from here on out. My guess is that this next quarter, when the big retail companies in China come out with their earnings, they're going to surprise on the upside. I think that more money is going to be spent during this current quarter than people anticipate. And my hope here is that some of the prices on these Chinese stocks are going to get bid up. Now, I know that most of the reason why these Chinese names are going down is not because the fundamentals are weak. I mean, for crying out loud, VIPS, the company that I want to invest so heavily in, has some amazing stats. Okay, so maybe I should show you some statistics here actually. Why don't we use, well, okay, let's use this one because we're familiar with it. Everybody who watches my videos is familiar with this one, but I'm starting to use stock analysis as well. Let me just show you the website real quick. There's this website here. It breaks everything down. This is the statistic tab. You can also check out the financials. You can do an overview. You can really briefly see this on the lower right here where it says financial performance. You can see the revenue growth. You see the revenue growth and the earnings growth of this company. So it's growing pretty steadily. It had a little bit of a softer year 2019. It looks like it's picking it back up in 2020, and I'm sure in 2021 as well. Actually, if you go to the financial statements here, you'll see that its revenue is growing. Let me see how much you can see from that. Yeah, so the top line there, you can see how aggressively the revenue is growing, right? So in 2013, it had 10, what is that, billion? Is this in Chinese yuan or something? Anyways, the point is it's growing quite rapidly here. And even though the rate of growth is slowing down, it's still growing, which is, I think, more important to have some growth. I mean, some companies actually, they don't even, some years, it's not a smooth ride up, right? Some years are down in revenue, some years are up. Maybe the overall trend over a multi-decade trend is up, but they may miss a year. But these guys have not had a lower year in revenue and or earnings. By the way, you can see this second thick line, the fourth line down, I think, are the earnings, gross profit. So it's also increasing. I have it on annual. Oops, if you want interested in seeing trailing, these are the numbers here. Let me see how much you can see. All right, so these are the trailing numbers. It's a very smooth ride up, and I expect this to continue. It's a niche business, right? It's a discount business. It's not the same, let's say, as Tmall, Taobao, or like JD, or even Pinduoduo, right? It's not exactly the same model. But anyway, let's go to this since it's very familiar to everyone. You'll see that the price to earnings here is 7. Now, even though the market cap is 6.69 at the moment, or maybe even lower right now as we speak, the enterprise value of this company is actually even lower than that. All right, it's actually 4 billion, or a little bit over 4 billion, and the income of the company is almost 1 billion. So what you're really doing here, the enterprise value, by the way, the way you calculate it is you take the market capitalization and subtract any kind of cash they have. And these guys have like 2.5 billion of cash or cash equivalents. So if one were to subtract those cash equivalents from the market capitalization, that's how you get enterprise value. So the enterprise value of this company is like around 4 billion, a little bit over. And income is a little bit under 1 billion. So they have an EV to earnings ratio of like 4.4. Okay, so let's call it a 4. So you're basically buying a business. Let's say, to make it more simple and relatable, you're buying a business for, by the way, look at this price to sales, it's 366. EV over price sales is like, I'm sorry, EV over sales is like 0.22. So let's say you buy a business for 200,000 and it revenue is $1 million, right? And then out of that $1 million, well, actually, let me give you a better example, okay? Hold on one sec. All right, so we started talking to billions. So, for example, let's say you are buying a business for 4 billion. They make 1 billion in basically profits, and you have 2.6 cash and cash equivalents in the company. So, I mean, it's kind of like, to scale down the numbers a little bit, it's kind of like buying a business for $400,000, something someone can imagine, maybe like a shop or something, a cafe, and then it does a ton of revenue, well over $1 million, right? And it earns you that 400,000, earns you $100,000. And the trick is that you have to also give the manager 260, let's say, $1,000 to play with. So that's kind of how it works. I mean, that's a really good deal, even for a private business. Not to mention, this is a publicly traded company, okay? And they have access to all kinds of capital and funding, etc. And it's more nimble because of that. So I think this is an absolutely fantastic deal. So the valuations, of course, are incredible, and I think it's worth the risk. I don't think that just because we've had some mishaps here with China, when it comes to listings in the U.S. through the VIE, ADR structure, I don't think that these problems will continue. I think that the Chinese will see that, even though they're stubborn and they won't admit it ever, but they're seeing how poking around in the bee's nest is having a negative impact on their economy. Okay, it's having a negative impact because the companies are not as strong. The capital flowing into the country is not happening, right? Actually, capital is fleeing from the country. So they're seeing this negative impact, and I think they're going to learn from that. I think they'll learn. They won't admit it, but they will learn that it's a negative thing. I mean, doing some of these reforms, even though they might be positive for the country and society as a whole, and they may improve the overall prospect of the citizens and the companies within it, someone might argue that. That's fine. It could be. However, straight up, the way they do it, straight up banning certain industries without, compensating or like doing something about it to where they make sure that the investors are treated well, is probably not good. Even from the Evergrande fiasco there, a lot of bondholders are not going to get paid, which is fine. It's a risk people take for holding these bonds. But, for example, if this was a U.S. company, everybody would be up in arms to try to figure out how to save it and stop contagion, etc. But the Chinese, they're not really looking into that. They don't want any aid. In some respect, it's more of a true capitalistic thing to do than to bail people out and to try to give them funding and nationalize, part of the company like the U.S. has. Actually, China might be nationalizing. Well, they nationalized a lot of it, but they don't necessarily bail out and provide funding in targeted places unless maybe people are politically connected. But my point is that they've been kind of harsh. They target companies like Alibaba, for example. It's pretty obvious, right? They don't let their representatives come to meetings about China and their development. I remember reading articles about that. And also, they fine them huge amounts of money versus basically no fines in other competitors of theirs, like JD, for example. So those things are negative, and I think that they'll realize they'll have to treat their investment world better if they want the capital to keep flowing into the country in order not to have their economy deteriorate, right? So that's the lesson that I think they'll go for. By the way, I'm wearing Chinese red here. This is Abercrombie & Fitch, by the way. I don't even know if that company exists anymore, but look, I'm not a China fan. I just like money, right? So I think there's an opportunity there. The consumers are definitely pumping it up. I think they are earning more money, despite of what the news headlines say, how they're tearing down the 996 culture, where I think it was called 996. What is it, 99 6 days a week, something like that. So I think they're trying to tear it down or whatever, but people still working really hard, okay? There's a lot of competition over there. There have a lot of guys, a lot more guys than women out there, so they want to make sure that they earn themselves their spot. They want to get some housing behind them, so they can attract some mates and stuff like that. I have lots of theories about it, but definitely one thing that's for certain is that the Chinese are hungry to earn, and as they earn, they will spend. So that is the bet, a very long-winded bet. But if everything works out fine and we get to keep our shares, then I'm going to be long despite the sell-offs that might happen due to delistings. I didn't even mention the reason why I'm not into miners. So mining stocks and resource stocks, I think that what I mentioned earlier, which is the reduction of asset purchases from the Federal Reserve and the slowing or stopping of newly printed checks to the everyday American, is going to actually eventually work itself through. The inflation will subside, and I think low margin stocks are going to actually do well. And I think with that, though, resource costs are going to be, raw materials are going to actually take a dip. So I don't know in the short run, of course, but I think like 6 months from now or something, I don't want to try to pick the top here. It's no use for me, but I think that raw materials will take a dip, and the productivity will increase, and the normal trends will resume of the better and bigger companies taking more and more market share of people's time and activities. So I just think right now buying gold miners and things like that is a bit risky for me. I much prefer to buy them after a crash when I know they're mispriced and I know that there are some mining dynamics that work in my favor, but as of yet, I don't think it's wise for me to do it. Like, if somebody wants to take the risk, that's fine. I just don't think they're particularly at a low, even if their valuations are somewhat attractive. So I've been burned too many times by resource stocks to know not to buy them unless it's like an absolute bottom. So those are my thoughts about that. So hopefully you guys are making more money than I am. It should be easy to do since I'm down off my highest 15,000 since last week. Since a couple weeks ago. And the market's up. So you guys should be doing well. If you're not, let me know. If you are, let me know. I'm interested to see what other people do. That's kind of one of the reasons I started doing this, is so I can connect and look at other people's, see how other people are doing. All right, with that said, I'm going to end it right here. All right, peace out.